Hi, Tori Agler with McIlvaney Precious Metals and your third quarter 2024 recap. A little bit of a retrospection on what has transpired. I will finish with a little bit of an outlook as to what my best guess is for what's on the horizon. But I love to do the recap, and I'll screen share here with you just so you have an opportunity to see what I'm seeing. And in terms of what has happened, not only in the quarter, but throughout the month of September as it brought the quarter to a close, starting with technicals. So we'll get into gold, silver, platinum, and palladium charts, show you again what has transpired, but also getting into the US dollar and the gold silver ratio. I know those are a lot of the technical images that you want to see. And then we'll get into the fundamentals a little bit later. So gold up 13.6% this quarter. This is a fun chart that just goes back through the 3 months. This is the 8th straight month of a higher monthly close for gold. This is just quite the bull market. I really felt like September would see a pause, and it just has not. It's continued to climb. In fact, it was up 5.3% in September. Here it is year to date, 27.5%. So again, a really fun chart going back to the first of the year. Pretty uninterrupted there. I mean, you get a little bit of choppiness here based on news of the day and news of the week, but all said and done, the underlying fundamentals are continuing to drive gold higher. Silver up 7.6% in September, so it's had a really good month. It was, trailing for the quarter after June and July, or July and August, I'm sorry, but now it is up 6.5% for the quarter as well. And if we look at the year to date, it's outperforming gold. It's up 30.3% year to date from the start of the year to the end of the year. Again, fun chart, but you'll see it looks like a different pattern and a lot more chop here, which has impacted things like the gold to silver ratio. Platinum down this quarter. So we've had a minority position in many portfolios, 5, 10% of the portfolio in platinum. I still love it. It's very, very undervalued. It was up 5.2% in September, so maybe it's coming to life. But really, the most exciting part about platinum, and if we look at it year to date, it is down. So from where we started the year to where we ended September, it's down about 4.2%, but that has made it an even better value. So think about the fact that platinum is down, silver's up 30%, gold's up over 25. And what it's done is it's made platinum a really good consideration for trimming potentially some of that gold, maybe even some of that silver into platinum, because it will have its turn. And so call me and talk to me about that, and I can show you some additional images that aren't quite as related to the quarter. Palladium up 2.5% in September, which is 1.5% positive for the quarter. So it's had a terrible year. As we go to the next image, down just under 10% year to date, but a lot better than it was. And certainly if we stretch this chart out from prior to the start of the year, you'll see that platinum is down over 60%, or palladium is, I'm sorry. And we've avoided that for the most part. It still is not something we're moving into out of platinum. We may be missing the move. We'll see. But right for the time being, I think that we're sticking with platinum. The gold silver ratio up 5.8 points this quarter, so 5.8%, because from the start of the quarter we did see a low in the mid 70s to just under 80. Right after the start of the quarter, we saw that dip down into the mid 70s, and now we've rallied a little bit. We saw a high of 90 a couple of times, as you'll see here, topping out, making good opportunities to add to silver. However, we're just relatively flat. That 5.8% is nowhere near enough. This volatility is nowhere near enough to be doing any ratio trading. So stay the course, stay patient on that. Here it is for the entire year, and you'll see it's relatively flat from where we started with this black line at the start of the year to where we ended. We are just about moving sideways there in the mid 80s. Again, still favors silver, even though silver has outperformed gold. We just are waiting for an opportunity here to see a more of an outlier event and a bigger swing. So what are the fundamentals we want to touch base on for the quarter? Obviously, inflation is a key one. We'll get into a little bit of debt, geopolitics, interest rates, bond yields, US dollar, and then the seasonal trends. So here's the CPI. You'll see this is what they want everybody seeing, is that the CPI, the consumer price index, this is less food and energy, has had a little bit of a chop here, where this is still an increase though. Like this is the percent change from a year ago. So even though it looks like a beautiful declining chart, we're still up 4.1% from a year ago. Okay. Now, this is the real image that we need to be looking at. This is the quarter, this is year to date on PCE or personal consumption expenditures. Nothing has gotten cheaper, right? So even though, again, going back to this chart, it looks like inflation is slowing, which it is, that does not mean that prices aren't continuing to climb. They're just climbing at a little bit of a slower pace. We haven't seen any semblance of deflation, which is cheaper prices. So that's a little bit of wind in the sail for gold, as is the debt. So now we're looking at 35.42 trillion in the federal debt. That's $269,000 per taxpayer that you owe right now. And another metric here, looking at that debt to GDP, 123.5%. So getting very, very dangerous. Even the Federal Reserve is trying to tell the Treasury to get their house in order. As far as geopolitics and politics, this quarter, obviously, we've seen no change other than a ramp up, right? So tensions are increasing both abroad and domestically. Geopolitically, especially even here in the last 24 hours, with Israel and Iran firing missiles into Israel again, like 193 of them. Israel, but is continuing to go aggressively after the Iranian proxy groups and having some success there. But again, no end in sight because there's no Hamas, um, type of progress in releasing hostages or looking for a ceasefire. Russia, Ukraine, China, you've got Taiwan, but you've got the Chinese economy as well. So the Chinese economy has really been faltering. It's taken a huge stimulus here in the last 2 weeks on the part of the Chinese central bank in order to try to get their real estate market and their stock market out of the doldrums. And in just 2 weeks, they have pretty much made back up what took 2 years to lose in their stock exchange. So we'll see if that stimulus helps. But with U.S. elections, I get asked this a lot. So we wrapped up our webinar last week with some of this. But if Harris wins, I believe personally that gold will go up in a very short order, somewhat substantially, a short $40 to $100 immediate little burst in the price, and then probably pause or retrace a little bit and kind of figure out where things are going. If there was a Trump win, then gold would pull back $30 to $50, in my opinion, and then resume its climb until December. And but those are like 1 to 2 day events where we'd see that type of volatility. Interest rates, I said I'd touch base on. You'll see here at the rate cut was September 18th, and it really had this immediate little effect, and then the rates climbed right back up. So this is the 30-year fixed mortgage. So you're seeing now about 6.95. It had climbed to about 7.1%. So they have come down here. You'll see this little downtick finally starting to have some effect from the interest rate cuts as they cut that 50 basis points, which to me was just a huge favor for the banking sector. Obviously, political favors, Wall Street favors, right? But also the real estate market. So those four benefactors are thankful for the rate cut. We do expect there to be a November and December rate cut at this point, which will drive the dollar lower. And I'll get into the dollar here in a sec. But what has happened here over the quarter, this is the 3 months, July, August, and September. Look at the treasury yields on the 2-year treasuries, just a steady decline with a little recent uptick due to probably, again, political instability here in the U.S., but also some geopolitical issues and dollar weakness. You've got the 2-year treasury yields year to date. So most of that downward action did occur in the third quarter of the year, but here we are in a steady decline from the start of the year as well. And the 10-year and the 2-year did reinvert and now are back into the normal range where the 10-year is paying better than the 2-year. The 10-year U.S. Treasury yield in the third quarter, this is the third quarter again, very similarly, seeing a decline with a recent uptick, but coming down off of 4.5, just 4.5%. Now we're at 3.8%. And the bond market is really what sets the interest rate market. It's not the Fed lending rate that they're manipulating. And then here it is year to date, relatively flat. So started the year right around 3.8, and here we are at 3.78. So flat on the year on the 10-year Treasury yields. US dollar index, this has been also very similar to those Treasury yields. We've seen this decline with just a really recent uptick. It's almost like you're looking at the same chart here. This 100, right around 99.8 to 100.2, is a real strong, stable support level or floor. And so if the US dollar drops below that 100 level, then you'll really see it, I think, accelerate to the downside, and this will be a continuing trend. Likewise, the gold price would climb accordingly because of their inverse relationship. So we'll see what happens here, but for now, we've got this sideways chopping here between 100 and 102. The same thing here. This is year to date, so stretching out beyond the quarter, relatively flat. Started the quarter at around 102, as I was talking about being kind of a ceiling, and now, you know, again, we're right below the 101. Not a whole lot of has changed despite the volatility, and seeing that swing up to about 107. And so we'll see if this recent decline continues. One of the other underlying fundamentals is seasonal trends. So average returns is yellow, the median returns is red. You'll see this is the zero line. So what this means is in that month, so we look at July, August, and September, you tend to be positive territory in July, August, and September. So we should have had a strong quarter. What we do start to see, though, is a dip in October into negative, like negative 0.5% return. So expect a little bit of a pullback in October before a November resumption of climb. And then we almost always see a decline in December. So if you're looking for opportunity, I do think that at some point in the next 3 months, we'll have a pause and retracement. It's just a matter of from where. Do we go to 2,750 before that happens? Or do we top out at the $2,683, which is the high that we saw here this quarter? This is another example of the seasonal trend and how we tend to go pretty strongly in that second half of the year, even though there are declines within those individual months. So what's the outlook for me? Again, everybody's kind of waiting and seeing what happens with the election. Does that change things significantly here domestically? Those things will take time. You'll have to see what economic policy is. You'll have to see what reaction to the election is. You'll have to see what formal policies start to come out of that. And then depending on who wins, is there real progress in sort of that off season, in that transition period between one administration leaving and the other assuming control? And is there, you know, peace in Ukraine and Russia, for example? Is there a ceasefire there? Is there a ceasefire with Israel and the Iranian proxies? We just don't know. That would certainly drive gold down in the short term if that were to happen before the end of the year. The rest of those underlying fundamentals I talked about take time. We don't control all of them. They're not all domestic, right? There are a lot of fundamentals that are international, and we don't dictate all of global policy. But you know, things like the Chinese economy are certainly something to keep an eye on. So for now, I think that until it changes, we're in a bullish trend, both in gold and silver. So for now, let's just say it's going to continue. But again, I would expect a little bit of a pause, maybe in October, maybe in December. What goes up often comes down. It's just a matter of from how high. And then I do believe that no matter who is the president next year, we're going to see a resumption of the gold bull market because of the underlying debt issues and the coming dollar weakness. The more they cut rates, the weaker that is for the US dollar, the more that drives that dollar index down and gold up. So hope that helps you kind of recap the quarter. As always, give us a call. Really important to talk about your individual portfolio, ratio trading setup, premium swaps, things of that nature, balance, percentages. Maybe you're looking at diversifying into an IRA or some other vehicle through which to invest. The number to call is 866-211-8972. Email me as well at Tori@McIlvaney, and this information here should help. So really appreciate all of you and look forward to working with you in the fourth quarter.